It's Tuesday, 23rd of December, 2025. Welcome back to your news update on Blip Brief, crisp, but almost everything updated every weekday. So let's jump right into markets. The holiday cheer is definitely here. Indian indices, well, they just logged their best gains in nearly a month.
It's that classic Santa rally.
Exactly, extending the rebound for a second straight session. And it looks like it has legs. Even the early indicators from Gift Nifty are showing, some real strength. It's squarely in the green.
And what's really driving this, I think, is the external push. Of course, there's domestic sentiment, but it's heavily, heavily fueled by positive cues from the rest of Asia.
And the foreign money is back.
The foreign money is back. We're seeing renewed foreign fund flows coming in pretty aggressively. And if you zoom out, the global picture is just providing this massive tailwind.
You mean the AI investment cycle and the U.S. rate cuts?
Precisely.
Yeah.
Those two themes are creating so much optimism. It makes emerging markets like India look incredibly attractive right now.
Okay, that makes sense. So with that momentum, let's look at some of the big corporate movers. Shriram Finance shares, they surged to an all-time high.
Right. That was on the back of the announcement that Japan's MUFG Bank acquired a 20% stake.
And that's a huge deal. What does that signal to you?
Oh, it's more than just capital. It's a massive, massive endorsement of India's whole credit cycle. When a giant conservative player like MUFG makes a bet that big, it's not just about one company.
It's about the whole system.
It's about confidence in Indian consumer debt and asset financing for the next decade. It's no surprise analysts are boosting their price targets. This should really accelerate their growth outlook.
Definitely a vote of confidence. And speaking of performance, Rent-A-Mojo's net profit nearly doubled last fiscal year. How does a rental company pull that off?
It's a masterclass in unit economics. That kind of jump, it doesn't usually come from a sudden sales explosion. It points to extreme efficiency.
So better logistics, better use of their furniture.
Exactly. Smarter supply chains, making sure their assets spend less time sitting idle, and just brilliant cost management. And, speaking of consolidating for efficiency, we see the Adani Group doing something similar.
Right, streamlining their cement assets.
Yeah, merging ACC and Orient Cement right under the Ambuja Cement's banner. A real power move.
Which brings us to a bigger picture finding from the ET500 data. It seems corporate India is just playing this cost control game masterfully.
Masterfully is the right word. The data for FY25 shows companies hit record high operating and net margins. But here's the crucial context you need.
Let me guess, revenue growth was flat.
Pretty much. Restricted to single digits for the second year in a row. So these record profits, they weren't from selling dramatically more stuff.
So where did the gains come from?
From extreme discipline.
Huh.
Deep supply chain optimization, negotiating hard on material prices, digitalization to cut overhead. It's all about building a resilient balance sheet, not just chasing risky top-line growth.
But that raises a question. Is that sustainable if sales growth is just inching along?
That is the central question. They've maxed out the efficiency levers. The next phase has to be expansion. And that's why the health of the public sector undertakings, the PSUs, is so vital here.
Okay. Connect the dots for us.
Well, the share of net profit in the ET500 coming from PSUs has just exploded. It jumped from around 17.9% in FY19 to a massive 30.7% in FY25.
Wow, nearly a third of profits from state-led companies.
It signifies two things. One, they've genuinely gotten more efficient. But more importantly, it shows the huge role state-led investment is playing in core sectors, energy, defense, infrastructure. They are the engines that will pull the private sector's top-line growth up.
Okay, that makes sense. Let's zoom out from corporate books to the national balance sheet. The macro data is also showing a nice rebound.
It is. India's core sector output, that's your 8 foundational industries, it expanded by 1.8% in November.
And that reverses the slight contraction we saw in October.
It does. And this bounce back was overwhelmingly driven by steel and cement production.
The classic indicators.
The classic indicators. It tells you that infrastructure activity and construction demand are strong. The post-monsoon slowdown seems to have faded.
Let's shift to currencies. The Indian rupee slipped a bit on Monday after a pretty good 3-day rally.
Yeah, that was largely predictable. You had renewed dollar demand from local importers and some pressure coming from the non-deliverable forwards market.
Which is that offshore market, right? A barometer for international sentiment.
Precisely. It really highlights the juggling act the Reserve Bank of India has to perform. Remember back in October when the currency was under serious pressure?
I do.
The RBI stepped in, and they stepped in decisively. They net sold a very significant amount of dollars to stop a sharper fall. They basically built a wall and defended that record low.
And that stability is key. Switching gears, a major trade deal was just finalized. India and New Zealand concluded negotiations on a free trade agreement.
At a remarkable pace, too. And this FTA is a big deal for job creation. It's designed to grant zero-duty access for Indian exports in really labor-intensive sectors.
We're talking textiles, apparel, leather.
Exactly. Textiles, apparel, footwear, engineering goods. It's a huge win for those high-employment industries. But that's not even the headline for me.
What's the bigger story?
It's the capital commitment. As part of this deal, New Zealand has pledged a staggering investment in India over the next 15 years.
A massive number.
A massive number and a deep, long-term strategic alignment.
Mm?
We're likely to see that money flow into green energy, specialized agriculture, and infrastructure. It guarantees a sustained flow of foreign capital.
That kind of commitment definitely grabs your attention. Let's broaden the lens now to global markets. International markets are also running hot. Wall Street, Asian stocks. They all continue to advance, extending this global bullish momentum.
And it's the same story there, really. It's driven by the incredible strength and just boundless optimism in the U.S. tech sector, all about AI.
But at the same time, all the geopolitical volatility is pushing money towards safe havens. Gold just hit a new record high.
It did. And that rush is fueled by two things. Rising geopolitical tensions, specifically the friction between the U.S. and Venezuela, and of course, the anticipation of those U.S. rate cuts.
Right, which makes non-yielding assets like gold more attractive. But silver's performance has been even more dramatic.
Silver is the real story here. It has more than doubled in price over the last year. It's this incredible dual demand asset. It's a safe haven, yes, but it's also a critical industrial metal for solar panels and electronics.
So investors are betting on both risk and the green transition at the same time.
Exactly. Meanwhile, trade tensions are flaring up again. China just announced anti-subsidy duties on some EU dairy products.
And that's seen as direct retaliation for the EU's EV tariffs, right?
It's textbook tit-for-tat protectionism. It just shows you how quickly these things can spill over into completely unrelated sectors, potentially raising costs for consumers everywhere.
And on the political front, some moves from the White House yesterday. U.S. President Trump announced the naming of a new class of Navy battleships.
The Golden Fleet, named after himself. It's a politically charged move, obviously. But more strategically, he is also recalling nearly 30 ambassadors globally.
The goal being to align embassies with his America First agenda. What's the immediate risk there?
Well, it creates a huge gap in diplomatic continuity. You're pulling out experienced people who maintain stable communication. It signals a major disruption and can be seen by, both allies and rivals as a weakening of consistent U.S. leadership abroad.
Disruption seems to be the theme. Okay, let's wrap up with a look at innovation, starting back here in India. Tata Electronics is making a big push into semiconductor manufacturing. They've just announced a major partnership with Japan's RHM.
And the initial focus is so important. They're starting with the assembly and testing of automotive-grade silicon MOSFETs. Mass production is slated for next year.
And these MOSFETs, they're the tiny transistors that regulate power in cars.
Yes, in everything from your infotainment system to the electric vehicle's motor. By localizing this, Tata is directly tackling India's dependence on foreign chip supplies, especially in the EV sector. It's a huge step toward building a resilient local supply chain.
From importing to actually producing.
Exactly. And this brings us to a fascinating AI breakthrough from Duke University that sort of flips the script on how we think about problem solving.
Okay, tell me more.
They've built an AI that's not designed to be more complex. It's designed to find simple, readable rules in incredibly complex systems.
Simple rules from chaos. I thought the whole point of AI was that you needed complexity for accuracy.
That was the assumption, but complexity creates a black box. You can't audit it or really trust it. This Duke AI, it takes systems with thousands of variables, like climate models or financial markets, and boils them down to just a handful of compact, simple equations.
So it's finding the elegant mechanism inside all the noise. What does that mean for a professional on the ground?
It means you get simplicity without sacrificing accuracy. Think of Newton's effima. It's simple, but it explains so much. This AI is looking for those kinds of fundamental rules for modern, messy problems.
So instead of a black box answer, you get an understandable equation.
Precisely. You move past just prediction and toward genuine, causal insight. It delivers clarity where before there was just overwhelming complexity, which could fundamentally speed up decision-making and, maybe most importantly, build real trust in these automated systems.
Clarity in a world of complexity, a perfect note to end on. And just before you go, a quick note, this deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.